Yeah, it's another day that we are continuing with our revision and handling the questions that were done on the previous sitting on August 2023, and it's a good day, and hoping you have subscribed to this channel for more content and for more revision and for more coverage of the business data analysis syllabus. So today we are going to look at question number 22. Already have covered question 21, we have covered question number 25. You can visit our YouTube channel to watch that, but I will be able to attach the link for the two questions that already we have done. Today we are covering question number 22 and we shall read it together. So Riziki Limited is considering a project with the following details: initial capital cost, which is 40 million, residual value of 2.5 million, selling price of 1.1, variable cost of 500, fixed cost per year, which is 5 million, additional annual number of units sold are 30,000. The project has a useful life of 5 years. The company uses a weighted average cost of capital, WCC, of 12%. So you're required to compute the base case NPV, carry out sensitivity analysis of NPV assuming an adverse variation of 5% for all the input except project life and weighted average cost of capital. So these two will not be able to change. Prepare an appropriate chart to indicate the different NPV for each scenario in B above. So an appropriate chart that will be used to indicate the different scenario, they indicate each scenario. So it was a question that was carrying 30 marks. Remember we said in this sitting, that last sitting, question number 21 and question number 2 are compulsory, because they are covering the core. So this one is covering the financial management. Question number 21 was covering the financial reporting. These were the core. 60 marks were core and they were compulsory for you to do. The theory part was 20 marks, and the other questions now is the specialization one. You have to do either taxation question, management accounting question, or you are to do the other question which was covering the tax, management, accounting and auditing. The three questions whereby you have to do only one covering, or which was 20 marks. So we shall start with this. We need to calculate our base, compute the base case NPV, and you'll find that when you are calculating our base case NPV, we have these our variables. We have the initial cost, we have the residual, we have the selling price. So they are 5 years. We are calculating for 5 good years that we have here. I can leave that so that I will come here and I will have my year 1, 2, year 3, year 4 and year 5. So this one is number A that we are computing. This is our number A. Compute the base case NPV, so we have the years there, and we shall start with our selling price. The variables that we have here, the first variable is the selling price, and it will be a constant for all the years. It will be a constant, so you can lock that value because it is a constant all through. It is a constant 1. And the variable cost, again I will lock it because again it is not changing. It is a constant, F4 to lock that value, and I just, and in this case let me just format this worksheet as far as I can. I normally like using the brackets, but it's not a must. You can just use the minus sign, that way, so that with that here we'll put a minus sign because variable cost is a cost we are minusing, and I'll drag this. When you minus it, you get the contribution. So you get contribution margin, contribution margin, or CM, contribution margin. and contribution margin alt equals, so the two of them here, I enter, so it will be 600, and I'll drag this, all through it will be 600. I'll put the top border and I will bold that contribution. Then I have the units here, the number of units, annual number of units sold. You shall have the units sold. The units sold were 30,000 each year. 30,000, and I will lock that value. I will completely lock that value. Okay, so it's not a cell. Okay, so the units I can include them to make it easy. So for my units, there were 30,000. So here I will pick this value and I lock it because it's not changing. Each year is 30,000, and I will drag that way. I'll get my total contribution. My total contribution, I know this one will be the unit sold, and I multiply by the contribution margin per unit, so I'll get 18 million, and I will drag this that way, and just highlight that. Okay, that way, and I will just drag this back. So that doesn't spread far, that way. And here I'll use the top border and I'll bold that. That is our total contribution. And after total contribution, we had the fixed cost. Here the other variable is the fixed cost. And again it is a constant, it is not changing. Our fixed cost was 500. I will lock that value and I will put it as a negative because it is a cost, and I will drag that way, and we'll get our after fixed cost is our net contribution or our cash flow. Net cash flow. In this case we did not have what we did not have the tax. We have not been given the tax, so you cannot assume a tax rate because I have not given you. They can either be using a base case of 30 or there is no tax. In this case there is no tax. Just move on without the tax. Fixed cost, get our cash flow, and our cash flow, just use alt equals, the two of them, and these two, and I will enter, and I will drag this through that way, and I'll use the top border and I will bold that. We had what we call the residual value. The residual value of 25. It means it's not depreciating fully. And because you don't have the tax, that means even you cannot calculate the depreciation tax shield, or you cannot calculate the depreciation, because the effect of depreciation we shall be having effect if we have tax, but in this case we don't have any tax rate, so the depreciation will not have an effect on our question. So I'll go directly to residual value because we shall recover it at the end. The residual will be recovered at the end of the useful life. Here, this is where I'll add my residual value of 25 that way. And our net cash flow, or our annual cash flow, just call it annual cash flows, shall just add, so this will be equals to this value plus this value. and I enter and I drag this that way. I'll bold that value and I'll put the top and bottom border. That will be our annual cash flow in this case. So that's how it was supposed to be done. So that's how that question was, the first part for getting what the base case. So the base case and PV are yet to get because they need the base case and PV. So we have our WCC, which is 12%, our rate. I can just write it here, WCC, which is 12%. Yeah, our rate is 12%. So our NPV in this case, the base case, because that's what we need, our NPV so in this case our NPV will be equals to NPV, just tab that. We need the rate, and our rate we have it here, 12%. We put a comma, and our values, this is our cash flow here. I'll highlight my cash flow up to that. I close the bracket and I will minus my initial. Remember, my initial in this case was here, my initial cost of capital, which is 40 million. Yeah, I'll minus 40 million because already that is 40, and I enter. So that will be my base case NPV, my base case NPV. You can use a different color to show my base case NPV. So we are done getting the base case NPV. Now we go to the second part where we need to carry out sensitivity analysis. Part 2 is we carry out sensitivity analysis assuming an adverse variance of 5% of all the inputs. So remember our inputs, these are our inputs. These are our variables. Let me just copy them here. Those are our variables that are changing. And the first one is the initial scenario 1. Scenario 1. So for scenario 1 is whereby we are changing what? The initial cost, the initial capital cost. So what I will do to this one, I will copy this value. Whatever we have done here, I will be copying this. Let me just copy this and I will come and paste it here. Together, because already we have locked everything. Already everything is locked under that, and we'll find that this one has not captured the formulas. So I'll copy it again. Need it together with the formula so that let me paste it that way. Together with the so shall start with the scenario 1. Let me start it here. Scenario 1. Scenario 1. And for scenario 1 is whereby we are changing the initial cost, and the initial cost we are told we are changing it by adverse 5%, and we know that adverse variation on initial capital cost 5%, it will increase. So I'll just use the initial that I have here, whatever I've already computed here. I'll come and change the initial, and I'll multiply. You can see here our NPV was 82. What if now we change this, because scenario is what if analysis. What if we change this? What if this one changes by 5%? So I'll multiply here by 105, 1.055%, or 1 plus that, and I enter, and you'll find that our NPV will change because the initial cost will increase, therefore our NPV will reduce to that particular value. So I'll copy this. Just need to copy this and come and paste it here, and I'll paste only the values, yeah, that way. And I can change this, and I bold that, and my NPV, can bold my NPV, change the color to yellow. So that is my NPV, So in that case now, under scenario 1, my NPV is 62. So this is scenario 1. Scenario 1 for initial capital. For initial capital, NPV is that. We go to scenario 2, and under scenario 2, come here, scenario 2, scenario 2, and for scenario 2, the second variable that we need to change is the residue. Yeah, the only item is project life and weighted average, so the residue value, this one. So the residue value, sorry, this one, the residue value. So what will happen? Residue value is an inflow, so inflow, it will reduce because it's an inflow. First put equal sign here for the residue, and adverse means it will reduce to 95%, 0.95, and I'll, so before I change this, remember for scenario we are adjusting an item at a time, so this one we shall return it back to normal 40. Then we adjust this now by 95%, 0.95, and if this one changes, you'll find that our NPV will also change. So I'll copy this, for scenario 2, and I'll paste it here, the values there. This is for scenario 2, and this is our NPV. Our NPV has changed. I'll change the color there. Yeah, this is scenario 2. NPV becomes 8209. We go to scenario 3. And the third variable that is changing, is the selling price. Yeah, the selling price is one that will be changing in the third scenario, and you'll find that first to return this to normal, because under sensitivity analysis, remember that's what we are changing. We are dealing with sensitivity analysis. Sensitivity analysis is whereby we are adjusting each variable at a time, holding the other variable constant. So selling price will reduce because it's part of the revenue, so it will reduce if it is an adverse variation. So we shall multiply this again by 95%, 0.95, it will reduce, and we'll find that again it will affect our NPV. Again, I copy this, I copy that, and I'll paste it here that way, and I will bold this, and even this one I will bold it, change the color for that so that at least it can be visible that way. That is our scenario 3, where we have changed the selling price. Then we go to scenario 4. So the fourth variable that is changing under the scenario 4, we shall change the variable cost. So we shall change the so here is the variable cost that is being affected, and for the variable cost, our variable cost here, these are cost. So selling price, first we return it to normal, so variable cost, we first put equal sign here, and we change, it will increase 1.05, yeah, 1.05%. It will change by that value, and because it's 5%, I enter, and you'll find that it will change my variable cost in this case, and our NPV will also change. I copy this, take it to scenario 4 that we had, copy the values, yeah, bolden this, top and bottom border, bolden this, and change the color. So you can use the light green that way. So that is our scenario 4, where we are changing the variable cost. So scenario 5, the fifth variable that is changing in our case is the fixed cost. Variable cost already have changed. The fixed cost is what now will be changing, the fixed cost per year, and the fixed cost per year, it is a cost again, and the cost is increasing. So first we shall change this, take it back to normal, 500. So here we change this by 1.05, it will increase by 1.05, and it will be that value, and you'll find that it has changed here to 5250, and our NPV again changes. I'll just copy this, copy that, and I paste it here, the values that way. This is our cash flow, border, top and bottom border, and this one I'll bold it, change the color palettes, I'll use a blue one, yeah, that way. And that is the 5 scenarios that were supposed to change in this particular question. Yeah, the way the question was supposed to be done under different scenarios, so that now we shall just create a chart to depict that. So we shall go back now and adjust the base case. Yeah, we shall now adjust, because already have copied that, adjust the base case here, the fixed cost, return it back to normal, so that the base case remains at 8280. Yeah, that way. I'll just do a little bit of adjustment on this to make them good. And unit sold, total contribution, yeah, that way. You get your cash flow there, yeah, that way. So you just use the top border. It's not a must for you to do this, yeah, it's not a must, because it will consume time. Remember, in an exam setting, the only thing that you don't have is time, yeah, so you can just leave it the values the way they are without even the top border. It will not change anything, it will still remain okay, Yeah, but for this one, because you have time, that's why you can just make them look at least good and organized. Yeah, but in an exam setting, time factor, you don't have time to do all these. Yeah, because time normally runs. Yeah, so that way, so that by the end of the day your work looks organized. Okay, total contribution and the cash flow here. Yeah, that way. So that is it for the second part of the question. So you need to answer the third part. Prepare and copy this and I paste it here. Prepare an appropriate chart. Prepare an appropriate chart to indicate the different NPVs for each scenario in B. So we shall have our variables here, our variables and our NPVs. Variables and NPVs. Variables and NPVs. Variables and NPVs. So the variables, we have them here, the variables that were changing. So these are the variables that were changing, the variables that were changing, and paste them here. And the NPVs, so the last one is this, that we have changed the fixed cost, it has an NPV of that value. The variable costs was the second last scenario, this one, that was the NPV. For the selling price, yeah, the NPV was this. For the residue, the NPV was 82. And for the initial cost, residue, initial cost, the NPV was this. So those are our NPVs. So prepare an appropriate chart to indicate the different NPV for each scenario. So those are our NPVs for the three scenarios. So I'll highlight this. I'll change these values into numbers. To use numbers in one decimal place so that it will pick while I insert my chart. So when I use the 3D or the 2D, whichever you will use, it will give you the best view. Okay, let me use this and I will edit this to use the data labels and my chart title. I will edit this to have NPV for each scenario, NPV for each scenario, NPV for each scenario. That way you can have that. Yeah, either use that or the black one, so whichever. To use this NPV for each scenario, and I will just fix it here, either there or even here. So prepare an appropriate chart to indicate the different NPV for each scenario in B. So this is the first scenario, and the initial cost changes, how the NPV will change, the residual value changes, and when selling price changes, you can see the selling price is the one that has it's more sensitive. You have to look at the sensitivity because NPV will reduce by a very big margin. Then the variable cost, then the fixed cost per year. So if these variables changes, the way the NPV will change according to the variation in those particular variables. And that's how that particular question was supposed to be done. Yeah, the only disclaimer I will put is that the question did not have tax. Yeah, So you can either decide to assume a tax rate of 30%, and that one will affect the cash flows because we shall have the effect of the tax shield or the effect of depreciation. The reason I have not used the depreciation is because it did not have the tax rate that we have been given by the examiner. Yeah, and remember, tax rate do vary, so you cannot make an assumption. You can assume maybe 25, you can assume 30, but in this case you have done it without the tax rate. So with the tax rate you shall include the element of the depreciation or the depreciation tax shield, which will affect our cash flow, but the method of computing will remain the same as what we have done. So continue subscribing. Now you can see it's a question that was being done, and you could have done it then within less than 30 minutes. Yeah, within less than 30 minutes is a question that was supposed to be done and completed within that particular time, because it was not that hard. So the base case and the different NPV and the different scenarios. So continue subscribing to this channel for more questions and for more in-depth analysis.